actually, we are in a good spot.
All right, Lata, thanks so much for putting all that perspective in the most watched out numbers, the Q2 GDP numbers that are going to be announced today. And also later today, remember that Fed chairman is going to make a speech. So those two are important aspects which will define the market movement going forward as well. But let's take it to another big story of the day. And we just heard our colleague Parikshit Luthra in conversation with Kirit Parikh of the government's panel on gas pricing. And in fact, some of the key highlights, Kirit Parikh panel recommends the price band for gas from oil fields and also have recommended a floor price of $4 for legacy gas fields. So there are many of those important highlights, and he was adding more color to that. Let's take it straight across to our analyst Sonal Bhutra, who's here with the impact the committee's recommendations could really have on the gas companies. Tell us, Sonal.
Thanks a lot for that, Nisha. Well, important takeaways from the interview and, of course, from the report that the Kirit Parikh committee submitted to the government. Of course, it's subject to approvals by the cabinet as well. It said that they have recommended price band for gas from oil fields. There's a cap and there's a floor as well. So it is between $4 to $6.50 per MMBTU. The ceiling price, which is at $6.50 per MMBTU, will be gradually raised by $0.5 per MMBTU every year. So that is an important clarification here. They're also talking about complete liberalization of gas prices, and that is a big takeaway. They talk about 2027, 1st Jan 2027, where they are expecting complete liberalization of APM gas prices, which is basically administered price mechanism where the formula is set to determine gas pricing, and difficult fields should see liberalization by 1st Jan of 2026. They have not mentioned much, but going by the conversation we had, they said that new fields will continue to enjoy pricing freedom. So that is another important takeaway. Now, in terms of how it will impact companies like the city gas distribution companies, they have been talking about higher gas costs as a big worry. Margins have been under pressure, and it is a big positive for them. Every $2 per MMBTU decline in gas costs for city gas distribution companies will have an impact of around 7.5 to 8 rupees per kg in their CNG segment. That is the kind of benefit they'll see. Either they'll pass it on to the customers or they'll retain it. In both the cases, it will be positive for these companies. 87% of overall revenues volumes for IGL come from CNG and domestic gas, 80% for IGL as well. So these two companies tend to benefit the most. Gujarat Gas a smaller amount, but still, again, it is a positive for them as well. If they actually pass it on, retail prices for CNG could be reduced by 7 to 8 rupees per kg. The domestic PNG prices could be cut by 4.5 rupees to 5 rupees per SCM, which will aid their volumes as well. So, of course, this has to be approved now. And if the new gas fields prices are not capped, it will be positive for the likes of Reliance Industries and ONGC, which are actually investing big time in newer fields as well. So, it's an all-in-all positive for gas producers like ONGC and Reliance Industries, and also for the city gas distribution companies.
Sonal, thanks a lot for analyzing all of this for us and taking us through what the takeaways could really mean for some of the larger gas